Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from Philadelphia, Dimitri Pogomonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. If you need to talk to a professional advisor, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Perfect.
Let me share my screen. If you guys are joining us for the first time, the reason we do the show is to answer any questions you have on Market Chameleon tools, data, analytics. If you want to discuss certain strategies or something unusual you've seen, you're welcome to come on a show, ask that question. And the two ways to ask the question is to put it on the live chat on YouTube. You can type it in. Will's watching it. It'll read it back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. Click on that link. It takes you over to Zoom. When you're in Zoom, there's a button there that says raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you and you could ask your question live and direct. While we're waiting for questions to come in, what we'll do is take a look at the pre-market report, see what's trading in pre-market hours. We have some backup questions from days before, so I think I'll default to those. I think the last one we left off, somebody was asking to go over Microsoft earnings data, earnings analytics. It wasn't anything specific. I think it was just
I think that was for he was just mentioning into earnings. We're deep into earnings, so he wanted to know about Microsoft.
Okay, well, let's take a look at the data. We'll take a look at it today. What the data looks like, and if we do have more questions coming in, let me know. I'm going to try to take all of those today.
All right.
And by the way, before we get started, I just did want to mention that there are a lot of you sending me really nice emails, and I have to say thank you, because maybe some of you are watching it, and usually I don't expect it, especially when you do customer service. You usually think people are going to contact you with problems or issues, or even like being angry, but I get really nice emails and actually really nice phone calls thanking me and the website, and I really appreciate it. I mean, like, some of them almost bring me to tears. So I do have to say thank you guys. Really appreciate it. I'll tell you that it really feels good. It makes my day, when you guys say that. So we try really hard, because at Market Chameleon, none of us have a marketing background. I do watch what other people do, and sometimes I watch a person's article or tweets or their commercials. I'm like, wow, I want to go take a look at what's going on there. But none of us have that, right? Like, we come from a trading background and a technology background, but we have zero experience with any type of marketing or anything. So people just come in here really mostly organically, or the little marketing we try to do. So it feels really good when they make compliments like that about the platform. So just wanted to say that, because I even had some emails this morning and a phone call today, so it made me feel really good. Wanted to say thank you. Now we'll start with the pre-market report, and I'll move on to Microsoft if we don't have any questions. Okay.
Perfect.
So the pre-market report, these are stocks trading in a pre-market hours. I'm going to come down here. We have a list with our most active stocks, biggest percentage gainers and biggest percentage decliners. So far, I see 37 stocks made our percentage gainers list and 141 stocks on our percentage decliners list. And from this perspective, looks like we're lining up for bearish bias at the open. If you guys look at the list, you notice that the list contains stocks that are small cap stocks, ETFs, closed-end funds, preferreds, anything that is trading on the major U.S. exchanges. And if it's trading in pre-market hours, it can make this list. So let's narrow it down to get a little bit more focused insight. And we're going to narrow down this list to stocks that are in the S&P 500. And to do that, we use the filters above here. This one in ETF, we're going to drop it down. We get a list of ETFs. And when you select one of these ETFs, the report below will get filtered by stocks that are holdings in that ETF. So SPY right here, S&P 500. Let's select that. And now you could see 3 stocks made our percentage gainers list, 32 on the decliners. Again, from this perspective, looks like we're lining up for a bearish bias at the open. And I'm looking at, the list. There are a lot of these E's, and those E's are telling us that there was either an earnings yesterday after the close or today before the market opened, and the stocks are reacting potentially to that news. Right. So I do see Microsoft here. There's that E yesterday, reported earnings after the market close. So I guess we could start out with that. I'm going to navigate to Microsoft and take a look at it from an earnings perspective. Sound good, Will?
Perfect.
Let's go to Microsoft here. And here we go. So this is it already reported earnings, down 3%. But let's look at the data and see what did the data look like prior to earnings. What does it look like post earnings? See if it creates any type of, trade ideas or potential opportunities here. And I'll start out with these interactive charts here. And up here, we have a few stats on Microsoft historical earnings data. Okay, and it looks at the stock from a potential movement. And when we analyze stocks, we build financial models, either for pricing or forecasting. Think of it in terms of, ranges, because there's no way to actually come up with an exact price, or you think about it in ranges. And when we think about earnings, there's uncertainty. We don't know if it's going to report good earnings or bad earnings, right? There's uncertainty, but we take a look at it from the perspective of what are the potential outcomes for Microsoft after earnings. So it's unlikely it's going to go to zero, for example, or it's unlikely it's going to go to $1 trillion, but how much can it potentially move? What is the expected range, and where are the option prices predicting it? So when a lot of you, I know, trade earnings, and usually it's based on that post earnings move, and how do the options line up based on that move in either direction, up or down. Okay, so that's probably 90-95% of people who trade earnings look at it from earnings move. Okay, so we'll look at these top stats, and then we'll start kind of going down, getting a little bit more insights, and then we'll maybe even try to do some filtering. If we look at Microsoft's historical data, on average, the options before reported earnings were anticipating a move in either direction of 4.3%. Okay, so the option straddle was priced at 4.3% on average historical. Okay, so here you could see historical, this is where the implied move is based on the option straddle. And this was yesterday's, it was anticipating a 5% move, which was above the historical average straddle. Okay. And you could see the distribution. So sometimes it was very low, sometimes it got up there 7%. But this is where it was yesterday, a little bit above the historical average, 5% versus 4.3. So that would be the premium for the very near term options, buying the call, buying the put, right? So if you're buying the call, buying the put, straddle, the stock has to move in either direction by big enough percentage to cover the cost of both options. Okay. But how did that compare to the actual move? Did the stock actually historically on average move enough to cover the cost? Or if it didn't, what was the difference? Okay, on average. And this is the average actual move, 3.6%. So now we have the actual move in front of us versus the implied move. And we see there's about a 0.9%. I'm sorry, 0.6%. Sorry, about 0.6% differential between the implied move and actual, right? Or 0.7. Sorry, 0.7. Still didn't have my coffee yet. Between the implied and actual. All right. So it tended to overestimate the actual move. And if we come down here, how many times that happened? 73% of the straddles overestimated the actual move. In other words, 73% of the time, the day before the straddle was priced higher than the actual move the next day. So it was overpriced, priced in more premium. 27%, it was underpriced, meaning that the actual move the day after was above what the options were pricing in. Okay. Now some people, so the earnings move is end of day to end of day. In other words, where did the stock close prior to the announcement, right? So if yesterday the announcement was after the market closed, so we will use yesterday's closing price because the announcement was after that. Okay. If it was today before the morning, same thing. We use yesterday's after the price, and we go all the way to the end of the day, give it a full days of trading, and that's the average up or down move. Remember, magnitude of the move. That's what we're looking at. Now, some people like to use the opening gap. The reason is that when the market opens, whatever the move was, you could start getting out of, you could start rehedging or getting out of your options. Okay, so how did the morning gap behave? On average, the move was up or down 3.7%. So you could see the magnitude of the morning gap was even higher than this move, so it tended to close in a little bit. All right, so let's compare. Right now we're at 3.2%, so getting close to that average, down 3.2% versus an average 3.7. And then the next stat we have is once it opens up, how much more volatility do we get? So this gap it's gonna, right, wherever it's gonna be in the morning, it's gonna gap already. We see now it's 3.2%. So let's say this is where we open, that would be considered a 3.2% gap. And now we open at this new price, opening price. From 9:30 to 4 o'clock, there's still a lot of time and continuous trading. So what does it do between 9:30 and 4 o'clock? And that intraday move on average up or down was 1.3%. So that's the intraday volatility. Okay. So these are really quickly on the high level up top. And we could start also narrowing down if we wanted to these stats. Maybe yesterday was the second quarter earnings. So maybe we want to see same data, but only for historical Q2 earnings, right? Maybe on Q2, the earnings moves are different than Q4 earnings or Q3 or Q1, right? Maybe moves differently. So let's take a look at these stats from the perspective of second quarter. I'm going to use this filter here, Q2. Now it's going to refilter everything below and here. So here on Q2, the implied move historically was a little bit higher, right? 4.7%. So remember all of them. I'm going to go back. If we took all the quarters on average, the straddle was pricing in a 4.3% move. But for whatever reason, on Q2, the straddle tended to price in a higher move, 4.7%. Okay. What about the actual earnings? Well, the day of the entire day, average move was 3.4%, but the opening gaps did tend to be bigger, 4.3%. So the opening gaps on Q2 earnings, I'm going to go back, show you guys again. So this is second quarter, but if we compare the opening gap moves to all, 3.7%, Q2, 4.3%. So the opening gap moves did tend to be higher on second quarters, okay? And the drift, intraday drift, pretty much the same. So those are things when you're starting to look at pricing, either straddles, butterflies, iron condos, when you're starting to strategize around moves, you're starting to paint yourself a picture of potential outcomes, right? Different potential outcomes. And we could get a distribution of them coming down here. So these are the implied moves, right? Here, this is the day-to-day. So the red ones are showing down moves, green ones up moves, but they're all going up because we're looking at percentages. So you could see here that absolute 3.4% from the previous day. Max move 9.3, min move 0.2, median 2.8. So you got your absolute averages and simple averages, and now you're painting yourself a picture of different potential outcomes based on history. All right. And this gives us a breakdown also up moves versus down moves. End of day versus end of day. Gap moves, up versus down. But these directional, that's much harder because we know that there's an earnings release, right? And there's uncertainty. Nobody knows what's going to be set. There's no way of knowing, what the company is going to say or what they're going to report, or they could report good earnings, but they could say something that is negative. And I think, wasn't that the case for Microsoft? I don't think they did bad. I think that they're just given indication that
Their guidance was negative.
Their guidance, right? So
and it was a lot of it has to do with the economy, what they,
Right.
the risks they see.
Right. And I would say like guidance at this point is probably more important than the actual number, right? Because if you report really good earnings, but your guidance is like, well, we're seeing things terrible going forward, that stock is going to react to forward-looking statements. And you could have had a bad quarter, but if you're saying, well, yeah, we had a bad quarter, but now we're seeing things shooting up and things are really good, you might go the other way. So I would say guidance is really even more important than maybe the numbers. What's behind the numbers? What's the story? So that's here we go, opening gaps. This is the intraday drift. We can't, once this happens, it happens. How much more do we expect this to move after the opening? And here, using the open to close, we could see here, how it moved in the past. So this one was down as much as 3.8%. So you could see that even using the average of 1.4%, even though that's the average, you could see from the high 3.8% to the low, there's a large distribution of returns, meaning that they can move around a lot around this average. Okay, and then this one finally, so this one's still doing from the open to the close. What about from to the high of the day or to the low? How much can it potentially move intraday to those to those extreme points? So to the high or to the low, the average to the high 4.4%, the average to the low 4.8%. So you could see here it intraday moves. So this would be the drift all the way to the close, but intraday we could still see pretty big moves of up to 4.4, 4.8%, even here 6.9, 10.4. So this is intraday high or low based on the previous day's close. Okay, so adding more to this. How about the straddles? On average, the straddles by the end of the day, historically for second quarter, 87.5% of the time, if you bought the straddles, it was a loser. So these are looking at actual straddles. There was a winner there. On average, they lost 10% of their premium the day after, right? So if you bought $1,000 worth of straddles, on average, they lost $100. Okay, that's including the ones that with your winners. So that's really quickly looking at it from the perspective of moves. Let's take a look at.
We did have a question about the taking the pre-market prices and how does that affect the move. Actually, 4D was mentioning it. He's wondering why we don't use what happens after hours or pre-market in the calculation. I think that was the question. 4D let me know if that's exactly it. But he was thinking how it moves after hours can be important in that calculation.
How so? I guess.
Well, he was saying that some of the biggest move, and I don't know how Microsoft moved after hours, but he was saying that some of the moves after hours were significant.
So I guess we don't for a few reasons we don't use the after hours analysis within this, is because when options don't trade it after hours, and you can't hedge them or can't price them, things are illiquid. We're trying to price it really where around where options and the stock market are the most liquid, with the most players that you could price them against each other. So we try to kind of stay consistent with the regular trading hours.
You can't price the options after hours. I mean, we're pricing.
You can't price them. Things are less liquid. They're moving. You don't have all the players involved in repricing the stock that you do during regular trading hours, right? So you don't have the large mutual fund institutions that don't trade after hours in there. So those moves themselves can really distort where the stock is. It would be harder to do that and put it in perspective of option premiums. So we are trying to kind of compare option premiums to actual moves during the same periods.
Actually, interesting. 4D was saying he's a day trader of he was talking about SPY, and he day trades Tesla.
Yeah.
And he mentioned ODTE, I guess 1 day to expiration. Those are the options he chooses to
0 TD. Yeah. And we're actually starting to create more stats for those 0 DTE. We haven't in the past, but I see a lot of volume there. And although I think that with less time to expiration, there's an informational disadvantage to the retail folks, because they just don't plug into the same amount of data, or it's too expensive to plug into the same amount of data as professionals. But if you're doing the 0 DTE in places like SPY, which is the market, there might not be that of a big disadvantage, because nobody really knows where the market's going to go. Maybe you have a little bit more as far as like, some stocks here and there, if you do your homework. But I think that maybe if you're concentrating on like SPY, maybe even Tesla, that's very widely held, QQQ, then you might not have as big a disadvantage as some other stocks. So what we'll do is we'll start to create a little bit more analytics around trading around those 0 DTEs. And I'll share with you as we move along. I think I showed you guys yesterday, started to put some of the features in place that we're going to be using. So these aren't stats or models, but look at I showed you guys yesterday, I think. The ability to go back intraday and look at the options chain to see how these options progress. So we do save periodic snapshots throughout the day, and then we're going to be using those, for insights and data analysis. But
yeah, well, 4D, if you have different data points that we don't have that you would like to see, maybe give us an email, support at Market Chameleon. If there are things that you look at when you're day trading that could be helpful, definitely send it over. He also said, and I know we've talked about this, he said it would be great if the platform covered SPX, because I guess that's another product he uses.
Yeah, we are looking at it, evaluating. The thing with SPX and VIX, these are index data. So they don't come through the same data feeds that we purchased or license. We have to go out and get a different data feed and bring it in. And there's not only the cost of getting it and the data, it's the development around different data feed with different, I'm not going to get into it, but it's a higher, it's an endeavor. It's a higher cost. So there's maintenance to it, and we're looking at it. I mean, I think we're evaluating it right now. I think actually one of our developers is looking at it right now and evaluating it. But again, it's not like a simple thing to add. When you're looking at licensing index data, it's from different place. They got different code and different ways of accessing the data, different rules, how you could use it. So it's not a simple thing like just to turn it on.
Awesome.
So we are looking at it.
All right, that's the opening bell. Just went off, my friend.
Okay. All right. Well, then, guys, have a great trading day. Stay safe out there. Hope to see you guys tomorrow. Thanks again for tuning in. We could continue on Microsoft maybe tomorrow.
All right. Great job as always, Dima. Have a great day.
Right.
Have a great day, Chameleons. Trade in peace. Bye.